What is going on, guys? Welcome to Stock Talk with Nico Criticos. Today, we're going to be taking a look at Take-Two Interactive stock. As you can see, the past 5 years, the stock has been a huge underperformer, really. It's only up 48% in the last 5 years. And I mean, if you were somebody who bought the stock at $100 or $110, well, then you made a decent amount of money. But really, it has not been a well-performing stock. And when you look at the financials, it makes total sense. Although the revenue has been fairly consistent, I don't know what they've been doing from 2015, the revenue has gone from a billion to 5.5 billion now, but the net income has been getting worse. And so, I mean, it peaked in 2021 at 588 million, and then since then it's been getting worse. And as you can see, for 2024, they lost $3.7 billion, which is insane. So on top of that, we have the debt is now $3.5 billion. Cash is only 700 million. The shares outstanding keeps going up. I mean, big time in 23 and 24 because those were the years they lost billions of dollars. The ROI and profit margins are, again, there's a couple years where it's okay. And then these last couple of years, it's just been going downhill. And especially going negative is just horrible. So I would say if you're knowledgeable on things like NBA 2K and Grand Theft Auto and you know how they're going to perform, maybe you might, I could see if you want to take a bet on it and you're saying, okay, these games are going to add a lot of top line revenue or they're going to help out the profit margins or whatever. That's great, but I mean, again, that only works if you bought the stock at, let's say, I don't know, $100 to $120 maybe. But at this point, 180 bucks, you're paying 83 times forward earnings, which is insane. And so definitely now I would say it doesn't look like a good buy. But I mean, maybe a year ago to 2 years ago, maybe it was a good buy then. But even then, with these financials, I would not want to own it because at any time, this stock should go right back down to where it was. I mean, this stock should go back down to $140 or $130 again because the financials are just not consistent. And so, I mean, I guess the revenue is consistent, but the main driver here is the net income. This is what we want to see. That's why I'm so confused how they could make, I mean, they were profitable on $1.7 billion of revenue, and now they're doing over $5 billion and they lost 3.7. So, I mean, we could even go down to expenses here and we can see. So let's see I mean, everything went up, but really, I think it's just sales and marketing. That's the big one here. I mean, everything went up though. All the expenses besides CapEx, these three really had a huge jump. And so that's just, I don't know. It's just not I mean, they have two of the most popular brands out there for video games, but I wouldn't call this a well-run company. And so that's why it wouldn't be one I'm interested in investing in. But thank you very much for watching, and I will see you in the next video.